In today's How to Build $1 Billion Startup Almost Overnight, I'm going to talk about the freemium strategy. That was the thought was triggered when I looked at the current valuation of Facebook, which is it went up to $109 billion again. And then on Bloomberg TV I saw where Zuckerberg said that they have 699 million active users. So when I looked at it, it was kind of weird because the data points came in literally within a few minutes of each other. So I was like, let me see how that works in terms of market cap versus active users. And then I realized that, of course, in Silicon Valley, if you haven't lived there, or Silicon Valley, one of the key strategies for a startup, or the quickest way to go from zero to $1 billion valuation, is to actually focus on the freemium strategy. And if you don't know what freemium strategy is, I'm sure you do, but I'll just say it. It's basically using your product or service digitally and offering it for free. So let's go through it. It's kind of actually a very interesting case study of how to build $1 billion startup almost overnight. If you once again look at the graph and you have market X here, whatever your market is, congratulations, and size is here. If you look at a lot of products or services, they usually go through a diffusion curve. A lot of times people think that when a company goes from zero to accelerated revenues that they hit a tipping point, but in reality when you look at the graphs, it's probably a diffusion curve. And in fact, Facebook, a lot of people talk about Facebook having an inflection point, but in reality, when you look at their growth patterns, it really was a classic case of fast growth diffusion. What I mean by diffusion versus tipping is that when you're using a freemium model, your objective is to get as many users as quickly as you can. So usually you want to, as an entrepreneur, startup entrepreneur, even if you're rolling out a new product, you want to kind of go like that. Because basically you're building the market right here to a certain point, and then one more customer, one more service out there just amplifies the curve. And instead of going the traditional diffusion fast growth route, you're actually going the tipping route. And a lot of times you'll see the tipping data points come in biology with the spread of viruses. So one of the key things when you talk about the tipping strategies, that you want to make the product as much as viral-like as you can. So a perfect example, I know it's overused, but I'll use it again, besides Facebook, Twitter, LinkedIn, and all that, is that in the early days of the internet, Hotmail just went hot. I mean, they literally went from 0 to 100 million users overnight. And so what do you have to look at when you're looking at freemium? Obviously, it's a function. If you look at freemium, it really is a function of what I call function of D. And D equals digital percentage. So obviously, most of the startup companies out there that you see going the freemium route are digital based, because it's kind of hard. So that really fine line between analog and digital, if this is 100% and this is 100% analog on this side and this is 100% analog on digital, obviously if you want to go the freemium route and offer it for free, you've got to make sure that you're as far as 100% as possible. Also, the other component of using a freemium is that strategy is that once you choose that strategy, you really have to segment it very carefully. And actually, we're going through it on one of our stealth startups right now, where I spent a substantial amount of time, literally like days, going over the business model. And one of the things that I looked at was the conversion rate. And the conversion rate can get tricky because obviously you can make the conversion rate from freemium to your payment service however way you want. But before we talk about the conversion rate, I want to actually go over a couple of things on the freemium side. So if you are using a freemium strategy, offering your product for free, you're going to segment that product, and you're always going to have some percentage usage of this product for free forever, because you're going to have some consumers that are never going to want to pay for your service. They're cheapskates. They just want to use it for free, okay? But if you look at it from a revenue vector standpoint, then you have to look at advertising, obviously transaction component, subscription, and usage. And Facebook, for example, has done really well by amplifying their advertising vector. And of course, they were initially PC based, and then as the internet started migrating towards mobile, then obviously they kind of got a little into the funk right after they went IPO, where there was a conversion of PC usage towards smartphone usage, and now they're amplifying their advertising revenues on the mobile side. So you have to also kind of consider that. So for Facebook, the advertising model has been really well. They've obviously made revenues off of transactions, subscriptions. They could make money on subscriptions, but at this point in time, that's not really what they're focused on. And obviously usage. And what I mean by usage, whether it's using something per hour, per event, you name it. So these four revenue streams are vectors are very important to look at from a business model perspective if you're using a freemium model. So obviously the intent of using a freemium model is to get as many customers as you can. So you want to get a lot of people with a lot of eyeballs into this equation. And obviously, the quicker you can go from, no matter whatever you do, if you're going to use a freemium model, there's going to be X amount of time where you're struggling to get your network up and running, your platform, whatever you want to call it, and then you want to be able to hit those tipping points as much as you can. And I think that one of the best examples of hitting a tipping point quickly is Dropbox. And the way Dropbox designed their product was really cool, where you store your information on the internet in their cloud, but then they encourage you to ask others to join the platform, the storage platform you could call it. And by doing that, you get extra space and they get extra space. So that's quite a brilliant move from a viral perspective standpoint. And another company that's doing really well is Evernote. They have 65 million users. I don't know the current data, but I know that 41 million freemium users, they had converted 1.5 million into payment subscribers at $5 a buck. So basically, when you're looking at freemium, you have to look at the conversion rate. And this is the part that actually has been very difficult for me to decide on one of the business models we're working on under stealth mode, which is what is the conversion rate. So for instance, with Evernote, when they were at, because they're a private company, it's always hard to get data, but when they were around 41 million users, they were able to get 1.5 million at $5 per month. So their conversion rate was pretty high, considering 41 to 1.5, it's like 3.7%, I think. And so when you're looking at your freemium strategy, the conversion rate is very important, so keep that in mind. So your conversion rate, like let's say freemium, if you're going the subscriber route, which is what we're working on one of these stealth startups, because this particular stealth startup does not really have an opportunity to kick in on the advertising revenue vector. It's more subscription. So you have to really look at the percentages, and you have to make it in such a way where the usage of your product, whatever that is, there's like certain amount of people that will always use it for free, and then you try to push some of them to pay you $5, 10 bucks, whatever, 50 bucks per month to get them activated. So that's very important for you to see it, because if you can show a couple of things. If you can show that you're getting a lot of free eyeballs on your platform, a lot of people using it for free, but then that there's a methodology and framework of how to get those freemium users and convert them into subscription users, an example, or the other revenue vectors are obviously transaction, advertising, and usage. But I think there's going to be on the internet a large trend towards pushing as many users as possible under the transaction model, which is commerce-based, as well as the subscription model. Because right now I can tell you one thing that really irritates me. Every time I'm on my smartphone, you know, the amount of ads coming through on my little screen, you know, all of a sudden my little screen on iPhone has become 1/3 occupied by some schmuck ad that I really don't want to look at, but it's happening. So when you look at the power of the freemium, I'm going to give you some perfect examples, and then you're going to really recognize why Silicon Alley and Silicon Valley loves the freemium model. So let's look at Facebook. They have total number is they have 1.4 billion users. Let me start this again. I made a mistake. Actually, I don't like the way I wrote it, so let me start again. Facebook, they have 1.4 billion users. Their active, according to Mark, is that they have 699 million active users. So their ratio is 49%. If you look at it from that perspective, so out of total users, active is 699, percentage is 49%. And then you could look at it a couple ways. You could say, well, what's the user worth based on the revenue? But in reality, whether you're raising money through your venture capital rounds or not, you can quickly analyze the worth of each user. Active user, in my opinion, is actually more important than total user by the market cap. So Facebook today was 109 billion. So what it comes down to is that dollar per eyeballs, I guess, is that it's about $158. And their primary business model, obviously, is still advertising. Yeah, they do have some on transaction. So now what we're going to do is we're going to do another example, LinkedIn. I'm using these two companies, and I also use Twitter because they are obviously platforms, social platforms, but they use a lot of the network effects. And when you're talking about building a business through a freemium model, one of the key things you want to do is set up a platform where your growth of new users, free new users, is growing as fast as you can. So if you look at LinkedIn, they have 238 million users. Their active users, according to most current stats, is 160 million. Okay, and then their percentage rate is 67% between active and total, which is pretty interesting. You can tell that obviously this is more of a serious network, and we'll go through that. And then, of course, their market cap at this point in time is about 32.9 billion, and their dollar per eyeballs is $200 and I think 206. Their model is much more interesting. Besides the freemium, they're obviously using more like a services model. So their business model is actually more diverse. It's actually, from my perspective, LinkedIn probably has the best business model of any of those social platforms today. They're using, obviously, part of it advertising, the subscription, and then transaction, or services actually, services component. So their business model is very, very powerful. Twitter, on the other hand, they're a private company, but what we found, if you can look at this data, is that their current valuation is around 10 billion. So I kind of had to work backwards a little bit. Their their total user base is about 554 million, but in reality, what that really means is there's multiple people using multiple accounts. So it's valuable, but it's not as valuable from that perspective. And then they have about 115 million active users. Their percentage is about 21%, and then of course their value per user is about 86, something like that per user. Now, if you look at all these, one of the key trends that you see is like, wow, you're worth something. When you get on Facebook, Twitter, or LinkedIn, you're very valuable to those companies, because look, $158, $206, and $86 for Twitter. So now that you have your LinkedIn account, this is the value of you to LinkedIn. And notice something that also interesting is that for instance, you can look at Twitter more of a general type of a social network. Obviously their social graph is different, it's based on interest. Their graph is based on interest. And then the Facebook has a social graph, which is more general too. LinkedIn is more of a vertical type of platform. So the irony is that they have less people than Facebook, but the value per user is much higher. And so if I can really prove anything to you, is the importance of using a freemium model. And I will say that having lived in Silicon Valley, the freemium model is really what was amplified the most by multiple companies in Silicon Valley. Dropbox, obviously, Evernote, Facebook, all these companies, Pinterest. So this is why you have to really consider, if you want to build $1 billion startup almost overnight, how can you build a freemium model that not only enables you to grow fast by using as much of a upright curve as possible. And so now it really comes down to, how do you grow these curves? Do you grow, does your curve go like that? Does it go more like Facebook's did, which was more of a diffusion model? And so it really comes down to where you're at. And so you want to be tracking that. And then obviously, because these are all freemium, even with Facebook, then out of this area, how much of it ends up being revenue based? So the easiest way, obviously, and you've seen this yourself, it's like the easiest way is just to pimp you out. And what I mean by that, I know it's a crude statement, but that's really what's happening, is that the user yourself, you're generating all this data on Facebook, Twitter, or LinkedIn, and the irony is that they're using your data to amplify their value and revenue streams. So there's going to be some, in my opinion, issues down the road of who owns the data and who controls the data. And so you're going to see some major fights in regards to that, because at a certain point people are just not going to be happy not controlling their data. And so that's what it really comes down to. And when I say controlling and owning the data, you get on LinkedIn or Facebook and all that, and you're putting all that data up, and it's your data, but really, is it really your data? So that's another topic to consider next time for discussion. But bottom line is that if you want to grow a big billion-dollar business almost overnight, you should consider using the freemium strategy. And then, of course, it comes down to the function of how percentage of digital versus analog. That's the key area. And so obviously, if you are 100% digital, then you can use the freemium. And then one of the biggest things you should look at is the cost to service per user. And there's pros and cons with that. For instance, you can use Amazon services, web services, to basically reduce your cost of servicing your platform, but there's pros and cons to that as well, and that's another topic. But in summary, think about your freemium model, think about the power of the freemium model, and then of course when you're designing your product and service, make sure that there's a viral component to it, because if you don't have a viral component inside your service, then you're not going to be able to grow as fast. So always think about the curve. If you've got a viral component, PV, so then you're able to go quicker, you can grow quicker because it's freemium, versus having to go gradually, because your objective then is, if you go freemium, the quicker you get to the most amount of users, then your option is either to get acquired or go IPO, and that's really what's happened with Facebook, LinkedIn, and Twitter's next. Until next time.